Hi guys, a bit of a pause in the panic overnight. I just want to show you what the yield curve looks like over the last week. So yield curve looking like this isn't great in the first place. You want a yield curve to be looking like that, not like that, which is a sign of a recession coming. And despite all the dramas over the last week, I think there still is a recession coming. But on the 8th, which is this blue line, interest rates are up here around 5.75. That was after Jerome Powell's testimony and hawkish comments. Yeah. And by Friday, and after non-farm payrolls, that had dropped to around 5.25. And then the banking issue hit the US on the weekend or Friday afternoon, Friday night, and it dropped down to here on Monday, which is 4.25 or 4.7 around there. So a massive drop of 100 basis points in a couple of days. And it's bounced slightly after last night's inflation numbers to be, what's that, around about 4.8, I'd say. 4.8% from the current 4.5% headline rate. So a lot of volatility in interest rates over and the expectations of where the Fed's going to go. There's a lot of talk now that the Fed won't move, with inflation numbers coming back overnight. Let me just show you what that was. So we came at 6%, which is bang on what the market expected. So that's a tick down from a little bit lower from the previous of 6.4, expected 6.2 last time. They're bang on the money, still very high, right? More than double than what it's triple what they want. They want inflation of 2%. It's triple that. There's still a lot of work to do. So will they raise rates? Now with the whole banking issue or the banking crisis, they're calling it, versus the inflation crisis. Market is right now is 75% in the expectations of a rate rise next week. So next week we get the FOMC, and there's expected 25% rate rise, or 0.25%, sorry, 25 basis points. And that's right now at 75% odds of that happening. So all the major data for this week is out. We've got Aussie unemployment tomorrow, but that's not going to affect the retail sales. Might, that's also an inflationary number. Seeing where how much money is being spent in the market, and if that's popped heavily, then the expectation is that inflation is taking, is weakening. So we don't need to be raising rates. So the picture could change in the week, as you've seen in the last week, how drastically it can change. But if we step back and look at the forest instead of the trees, I think that the larger picture is that we will be heading into recession over the next couple of quarters, and the rates may be close to peaking, purely because of that banking crisis and the fear that raising rates so far as they have broke a couple of the regional banks. Raising more, what more damage is that going to do? So I think we are getting close to the peak in interest rates. There was talk of 6%. That may not be on the cards now. So it's certainly a tricky time when we're at that tipping point. And sometimes rather than looking at the trees, you've got to back away and look at the forest, see what's going on. So a lot of volatility, as you can see in bonds, certainly got sold off, and tried to sort of rally in yields, and they're coming up a little, but on the back of that inflation numbers overnight. But yeah, I think we might see a little more upside, but it's getting very choppy now, even on the daily. So again, finding a direction is going to be difficult. You come and have a look at dollar index. It too is now will probably now start to become choppy as it tries to change direction. As we can see here, it starts to get a little choppy as it tries to break this downtrend. We had this nice uptrend, clearly broke that uptrend quite easily, but now it might be a little choppy as it tries to work out what direction it's going to be going. Will market be bid US dollars or sell US dollars? And I guess in times of risk and uncertainty, the US bond market is a go-to safe haven, and that does well for the US dollar. But in times of, I guess, good growth, the need for US dollars is less. So you'd be a seller. Where we're at right now, a little hard to say. I think bigger picture, the US are close to a recession. In those instances, the stock market will sell off. Excuse me, and people will be buying US bonds and US dollars. Just quickly at US stocks, try to bounce, bit of a dead cat bounce, one would say. Came back and filled in a few gaps, a bit choppy, but yeah, I don't think it's time to be buying stocks with a long-term view of strong gains. Aussie dollar, I think it'll get through 67 cents. It'll struggle. I prefer to be a seller of that there. Euro dollar, we've got the interest rate announcement later this week. If I want to be a buyer, but technically we're in an uptrend now. So technically you'd be a buyer of this. Just fundamentally, I'm not sure if I want to. Yeah, and fundamentally, I don't see the pound being a super strong economy right now. So fundamentally, I don't want to be a buyer of this either. And technically, it's just a dog's breakfast, so I'll stay away from it. Whereas this one, I'm happy to be a buyer of yen at the moment, even though the BOJ want a weaker yen. There's that safe haven flow that's going to dominate, and the yen will benefit from that. So something like the 4-hour here, maybe selling US dollars and buying yen, or looking at some of the crosses. All right. I hope you enjoyed that, and stay safe out there. It's pretty tricky. I'll catch you next time.